So you received a letter from your bank asking for hazard insurance. What is it and why are they asking for it? You have questions, we have answers. Let's get into it. Hazard insurance is not really a word used in insurance contracts. In fact, I can't tell you why it is that banks refer to it as hazard insurance, being that the insurance industry and standard insurance contracts don't mention the word hazard. But basically what they're asking you for is for you to provide physical damage coverage to tangible property that they're using as collateral for the loan. Now that's basically fancy of saying that they want you to have property insurance in case something happens to that thing that they gave you the loan for. That could be anything from the building for a standard mortgage, whether it's commercial or residential, they want you to insure the structure. Or it could be for the contents or business personal property. That's most commonly requested for commercial loans. When you're getting like a line of credit or an SBA loan, they want the contents coverage, the stuff inside the building, to be covered because that's what's being used as collateral. Or sometimes you've taken out a loan to get that new piece of equipment, that construction equipment or that mobile equipment that doesn't specifically have a home, it can be moved from place to place, and they're asking for you to have mobile equipment coverage for that type of property. Though that letter you received asking for hazard insurance generally doesn't specifically say the causes of loss that they want covered. Causes of loss being the types of physical damage that the policy will provide coverage for. It's basically implied that they want the broadest coverage available. So you're talking about things like fire, vandalism, malicious mischief, lightning, hurricanes, windstorm. In commercial insurance, it's often called special causes of loss. It's the broadest available. For homeowners insurance, it's what's called an HO3 policy. Now there are exceptions to those two words, where sometimes they are still very broad or even broader coverages available, though they're using slightly different terms. But more often than not, you're looking for some type of special coverage on the commercial or an HO3 on your home. Interestingly, most of the time, because as a general rule, flood insurance is not covered on the standard property policy, whether it be residential or commercial, they really don't consider flood a hazard. If they want it or if they need it because of a federal guideline and you're located in a special flood hazard area, they'll ask for it specifically separate from the hazard insurance. Because it's insured separately, they don't consider it as part of the hazard insurance, they'll ask for it on its own. So what do you need to be able to get an insurance quote for the property coverage that's being asked for, the hazard insurance that's being asked for? First and foremost, we need to know the value. So if it's a building, what the replacement cost value to rebuild the building from the bottom up. And if it's contents, it's what's the total cost to replace all of the contents inside the building. Now, interestingly, when I say all of the contents, I mean it. Think of the building as a box, turn it upside down. Anything that falls, that's contents, whether it's computers, stock, paper clips, pens, pencils, office furniture, whatever it is considered contents. They're not just asking for coverage for your inventory. Another interesting fact is that the cost to replace your property, whether it's building or contents or even equipment, has nothing to do with the value of the loan. You heard that right. The cost to replace has nothing to do with the value of the loan. Especially here in South Florida, you could find a very small home on a very large lot where the total value is $1 million as far as it's being sold, and that may have been the loan that was being given. But the cost to replace the structure could only be $200,000 because it's a small structure and an older structure. So even though the bank may want to say, hey, you need to insure the value of the loan, you don't have to insure anything more than the actual cost to replace the property, contents, equipment, or building. The age of the building, the size of the building, the type of construction the building is made out of, and when the building was last updated, meaning the roof, the electrical, the AC, and the plumbing, all of those things have a huge effect on the cost of the property policy. Whether it's the building, makes sense there, or the contents. A lot of times we get asked why we need to have the building information for the contents, and it's actually pretty simple. Whatever happens to the building will happen to the contents first. So the likelihood of something happening to the building has a huge effect on the cost of what it would be to insure the contents. Another important thing you're going to want to let your insurance agent know is whether or not you have a central station burglar alarm. Now that's just a fancy way of saying if you have an alarm that when tripped calls the police to come out and check what's going on. For business policies, business personal property policies, or business contents policies, this is extremely important because most carriers won't give you theft coverage unless there's an active central station alarm at the location covering all of the exits and entrances. Now, all those things have an effect on the cost of the policy. And really, you could have two buildings right next to each other that look very similar that end up having very different insurance costs because looks can be deceiving. But in general, the least expensive type of building to insure and the contents inside of it to insure are relatively new construction, somewhere between 10 and 20 years old, that is concrete construction, both roof and walls. In Florida, that tends to be the least expensive type of structure to insure, both for the building and for the contents inside of it. Not all insurance is created equal. We've talked about a few general definitions and explanations, but you'd have to see your insurance policy and your bank's insurance requirements in order to know exactly the type of coverage you need and have to comply with those requirements. That's where your trusted insurance advisor comes in. We're here to help you understand what the insurance contract is and how it can work to fulfill the requirements of your bank loan. If you don't have a trusted insurance advisor or you're looking for a second opinion, feel free to reach out to us at www.depozitoinsurance.com. There you'll be able to text, chat, send us an email. You might even be able to start your quote right there online. We're here to help you with anything and all of your insurance needs. Thank you.